Hello everyone, welcome to Akira's Academy of Accounting and Finance, and today we are going to do an illustration related to the share capital. Okay, so in the previous video we discussed about certain terms, right? First was like, let's say, the types of capital, the authorized capital. What is an authorized capital? That is the maximum amount that they can ask from public for their company. They can make certain changes, but for that they have to go through a process. Okay, so this authorized capital is mentioned where? In the memorandum of association, right? So in the memorandum of association, it will be mentioned how much will be the authorized capital. 1 lakh equity shares of rupees 10 each means 10 lakh rupees. Okay, this will be the authorized capital. Now this authorized capital, now they want money, the company needs money. What they will do? They will issue a prospectus. It is a kind of a document wherein they will mention about their objectives, why they need money, and what are the future perspective of that particular company. So that will be mentioned in the prospectus, and then people will apply for those shares. Okay, that will be what? IPO, initial public offering. Okay, for the issued capital. For unissued capital, next time when they'll ask, that will be a follow-up public offering. Okay, so issued capital, 60,000 equity shares of rupees 10 each. Okay, now when they are issuing the shares, they can issue at par, at premium, or at discount. Okay, at par, at premium, or at discount. For your information, this is right now not allowed. Okay, in certain situations only they can issue the shares at discount, when in the case of sweat equity shares or in the case of forfeiture of shares. Right now we are not going to discuss about it, we will discuss about it later. Okay, then comes, they can issue the shares at par, at premium. Par, what does we mean by par? We studied the face value. Every share have a certain face value, the value of that particular shares. Okay, so that face value in this situation, rupees 10 each, rupees 10 each. It can be any number. Okay, 1, 5, 10, 15, 20, 100, any number, but it won't be in decimals, right? So rupees 10 each. In this situation, the face value is 10. So the par value is equal to the face value. Okay, this is equal to the face value. When we say the shares are to be issued at premium, premium means over and above the value of the face value. Let's say premium amount they are asking. So premium could be 18 rupees, premium could be 100 rupees, premium could be 500 rupees. It could be anything. It depends upon the company's value, company's prestige, on all those things. It depends. Okay, so premium amount in this situation, let's say 20 rupees, that is the premium amount. So what will be the premium amount in this situation? 10 will be the face value and 10 rupees will be the premium amount. 10 rupees will be the premium amount, right? Right now I am just telling you that this is the face value. This will be shown as a share capital in the books of the company when they are preparing the balance sheet, whereas this 10 rupees they will show, let's say, let's take 25. Okay, this 15 rupees, they will show as securities premium, as securities premium in reserves and surplus, and for certain purposes this premium amount will be used. We can't merge this premium amount with the capital amount. Okay, and the next could be at discount. At discount means, let's say, 9 rupees wherein the face value is 10 rupees. So discount amount is how much? 1 rupee. Okay, right now it's not allowed. I said in two situations they can issue the shares at discount, otherwise they can't issue. So they can issue the shares at par or at premium. Premium, we are going to discuss about that also in later. Okay, later we'll discuss. Right now let's say they are issuing the shares at par. Now what? Now they will ask money from the public. They can ask the whole amount, whole 10 rupees at that point itself when they are issuing the shares. Right now in present situation it's happening like that. Book building method it is called, wherein they are asking for the money at the time of the IPO itself. But earlier what used to happen, they used to follow a fixed price method. Fixed price method. Fixed price method. Okay, now it's book building method. What they are doing, they are giving a range, and we will discuss about this in future how it goes. Right now we have to study what used to happen earlier, that is a fixed price method. Fixed price method means what? They will ask amount in installments. Okay, what installment? Let's say first they will ask about the application money. They will ask like first give us the application money. Let's say in this situation rupees 4. Okay, when they go for IPO, they just ask for rupees 4 as the application money. How many people are applying for those particular shares? Okay, now when they are applying the shares, when they are subscribing, okay, when they are subscribed capital, after issued capital there comes subscribed capital. So the subscription can be normal, like whatever, how much they have asked for it, that many shares have come, or it can go for over subscription, or it can go under subscription. The shares could be oversubscribed or it could be undersubscribed. Now when I say oversubscribed, means they asked for 60,000 equity shares, but 65,000 people have applied for those shares, so 5,000 is oversubscribed. Now when 5,000 is oversubscribed, they will return money to those particular shareholders. Okay, or there is a case of a pro rata allotment, which we will again study later. Okay, right now 5,000, if it is oversubscribed, they will pay off that money. Their subscribed capital can't go beyond the issued capital. Subscribed capital will always be equal to issued capital, or it can be less than the issued capital. Okay, or it could be undersubscribed. Undersubscribed means less people have asked, issued the shares. In this situation, let's say for 60,000, 58,000 have been subscribed. Okay, so 2,000 is undersubscribed. 2,000 is undersubscribed, no issue. You will take the money of 58,000 shareholders. Okay, 58,000 shares, but there is a condition of minimum subscription. Minimum subscription can't go less than 90%. Okay, it should be the minimum people who have subscribed for shares should be 90%. If it is less than 90%, then the company have to refund the entire amount. Earlier it was like a rule of 120 days, like 120 days when they have asked people money for it, like within 120 days there should be minimum subscription. If minimum subscription is not there for in that particular period when they have issued, within 120 days, if it is not there, then within 130 days, like they'll get 10 days to refund the money, entire amount to the public. If they are not refunding the money, if it is getting delayed, then they have to pay interest at the rate of 50%. Okay, but now everything is digitalized. Okay, there is no physical transfer of share certificates and everything. I explained you the ASBA application supported by blocked amount. So all these things, because of all these things, now it has reduced to 15 days. If within 15 days, if the company is not able to refund the money, then they have to pay interest at the rate of 15%. Okay, so now what we will do, right now we are just considering that 60,000 equity shares, 60,000 people have given the application money. Now when 60,000 people have given the money has come into the company. Okay, so what will be the journal entry? Money has come, bank account debit to equity share application account. Now for all these things we will open a separate account, and then we will transfer it to the share capital account. So in the first general entry will be what? The money has come 4 rupees has come for 60,000 shares. So bank account debit to equity share application account, 6 fours are 24. So 2,40,000. Okay, 2,40,000. Okay, now this equity share application account is there, but what we are supposed to maintain? We are supposed to maintain the share capital account. So this equity share application account will get closed and the money will get transferred to equity share capital account. So what will be the next entry? Equity share application account debit to equity share capital account. Okay, 2,40,000. The money will get transferred to equity share capital account. Okay, now let's say in this situation the shares were fully subscribed, right? Let's say there is a situation of oversubscription, right? 65,000 shareholders have applied. Now 5,000 is oversubscribed, means how much extra money they have received? 5,000 into 4, that is 20,000. Okay, this is extra money they have received for oversubscription. So first money has been received, bank account debit 240 plus 20, that is 2,60,000 to equity share for application money has been received. So 2,60,000 to equity share application account 2,60,000, right? Now the company's subscribed capital can't go beyond issued capital, means the company has to refund that extra amount. What will be the entry? We closed equity share application account debit and transferred the money to share capital account. Now 20,000 is there, we need to refund that money. So the third entry will be equity share application account debit to bank account 20,000, being money refunded to the shareholders. 20,000 money have been refunded to the shareholders. Okay, you can combine it the same, you can combine it like equity share application 260 to equity share capital 240 to bank account. This will be a combined entry, right? Done. Now what will happen? The shares will be allotted to equity shareholders and it is mandate that the shareholders need to pay a certain amount of money during allotment. Okay, so the company will again ask for certain amount of money at the time of allotment. They will send a letter of appreciation to the shareholders that your shares have been we are allotting these many shares to you, and to letter of rejection to the shareholders whom they are refunding the money. Okay, so now let's say allotment money they asked for ₹3, right? ₹3 they asked for. First the allotment money will become due and then they will get receive the money. So first the amount will become due. What will be the entry? It will be for allotment, so equity share allotment account debit. In this situation we were not knowing how much money will get due. Okay, so first the money will be received in case of application. In allotment we know how much amount will get due because the subscribers are mentioned, right? So equity share allotment account debit ₹3, 3 into 60,000, that is 1,80,000 to equity share capital account 1,80,000, and now these shareholders will pay the money. So the entry will be bank account debit 180 and equity share allotment account will get closed. So equity share allotment account 1,80,000. Okay, understood? Now we know they were oversubscribed. Let's say I asked for 20,000 shares. Okay, but how many shares I received? I received 15,000. So they refunded money for 5,000 shares. Fine, 5,000 shares, they refunded me the money. Let's say they said, okay, we are not refunding your money, we will adjust this money to your allotment account. Okay, allotment, we don't pay us for these 5,000 shares, the allotment money, we will adjust that amount in your during the time of allotment. So 5,000 into 3, sorry, 5,000 shares into 4. Okay, 5,000 into 4, that is 5 4 20,000 will get adjusted. This amount can get adjusted during the time of allotment, that you will learn in pro rata allotment. Okay, how they allot the amount. Okay, for that I'm just explaining you what will be the entry instead of to bank account. What they will mention: to equity share allotment account. This money will get adjusted towards the allotment amount, and then they will receive bank account debit 160 to equity share allotment account 1,60,000. Okay, first thing you understood, if they are fully subscribed, simple entry 240, and the 240 will get transferred to share capital account. And then fully subscribed, they whatever money they have asked for during allotment, first the amount will get due and then they will receive the amount. If it has been oversubscribed, there are two situations. First situation, they will refund the money to the shareholders how much is oversubscribed, or else the second situation could be they will adjust it towards the allotment amount. Okay, they will not refund the money, they will adjust it during the time of allotment. Fine. So this will be the situation. Understood till that point? If it is a case of minimum under subscription, we learned what will be the situation in case of over subscription. If it is under subscription and if it is fulfilling the requirement of 90% of minimum subscription, then whatever amount they have received, same effect for those many shares, like 5800 shares, 58,000 they have applied. So for 58,000 we will make the same journal entries. Okay, got it? Now allotted, the shares have been allotted to the subscribers, 60,000 shareholders. Okay, now what they will do, they will call the money in installment. Okay, they will make calls. It could be first call, second call, third call, and final call. Okay, they will make a final call how much money they are supposed to pay in installment as and when they need it. Okay, not necessary they call up in 3 calls or 4 calls. They might call it in first call itself, but they have to mention in the first call, if they are asking for the money full amount, see 4 5 6 7, now 3 rupees are pending. If they ask for money in the first call, so they have to mention first and final call. Okay, if not first and final call, in the second call, so they have to mention second and final call. This is what they have to mention. So first call, let's say they ask for rupees 2. Okay, and second and final call, let's say they ask for rupees 1. What will be the entry for first call? First, the amount will get due. Equity share first call account debit. How much? 2 rupees for 60,000 shares, that is 1,20,000, to equity share capital account 1,20,000. Okay, this is the allotment. First call amount is getting due, and then the shareholders will pay bank account debit to equity share first call account 1,20,000, being amount paid by the shareholders. This is what you are going to mention in the narration, right? And then they will make a second and final call of rupee 1. So 1 into 60,000, that is 60,000 they will ask. So first amount will get due, so equity share second and final call, this is the final call. Okay, second and final call account debit 60,000 to equity share capital account. This amount will get due. Okay, and then they will receive the money, so entry will be bank account debit, and the equity share second and final call account will get closed. Okay, you understood till this much? 60,000 and 60,000. Okay, fine. This is the simple journal entries you need to pass for all these things, but that won't happen in exams, right? It can't be so simple. There will be certain complications, and we will read about it, we'll learn about it. So the first things could be calls in arrears. Now what is calls in arrears? Calls in arrears means one few of the shareholder or one shareholder, he didn't pay the call money. Okay, maybe first call, maybe second or final call, he didn't pay the call money. Okay, so that when he don't pay, let's say a person holding 2000 shares didn't pay the second and final call money, that means he is not paying 2000, he has not paid 2000 rupees. Okay, fine. Now if he has not paid 2000 rupees, that is known as calls in arrears. This term is called as calls in arrears. The amount is still due from the shareholder to pay off for the second and final call. He will be given a chance to pay off the money certain stipulated period, 14 days. If he is not paying that amount, then his shares will get forfeited. Okay, or else if he is paying at a future date, then he has to pay interest on it. So for that also we will learn how the shares get forfeited. But let's say he is not paying, till this much we are supposed to understand. If he is not paying, so whatever amount they have received, let's say second and final call, he is not paying, so bank account debit 60,000 to equity share second and final call account. No, he has not received, right? 58,000. We have received 60,000 minus 2,000, that is 58,000 amount has been received. So bank account debit 58,000 to equity share second and final call account 58,000. Right? Fine. Now we have to close it. 2,000 is due. So what we will mention? Calls in arrears account debit 2,000 to equity share second and final call account 2,000. Okay, this will be calls in arrears. You can combine this entry, you can mention calls in arrears over here 2,000 to equity share second and final call account 60,000. Like this also you can show it, or else you can make a separate entry. So calls in arrears means what? One of the shareholder fails to pay the call money. He fails to pay maybe the first call, maybe the second and final call, maybe both the calls. So we need to show it in our books that these calls are in arrears, they have not yet paid. We need to show it in the balance sheet that this is the asset. In the side of asset we need to show, no, not in the side of asset, in notes to accounts we need to show that subscribed and called up capital 58,000, subscribed but not yet received, not yet called received is 2,000. We have to mention 2,000 is calls in arrears. Okay, so this was calls in arrears, but there could be a situation wherein somebody has paid the money in advance. Okay, that is known as calls in advance. Let's say they have not called for second final call. Okay, let's say, let me just erase it. Okay, now let's say, okay, I forgot to mention one thing about calls in arrears, that if the calls are in arrears, they have to pay interest. Okay, that interest amount will be mentioned in articles of association, right? And if something is not mentioned, then as per Companies Act, they have to give an interest, they have to charge interest from them at the rate of 10% till the time they make the payment. Okay, and when they receive the interest, the entry will be bank account debit to interest on calls in arrears account. Right, now we were talking about calls in advance. Let's say they have not made the second and final call, right? They have not made any second and final call. They have just made the first call, and there is a shareholder holding 1,000 shares. He has paid the advance amount. See, application money was 4 rupees. Okay, allotment was 3 rupees. First call is 2 rupees, and the last due amount is 1 rupee. Okay, the final call, second and final call amount due is 1 rupee. So this shareholder, he paid the first call money, but he also paid the second and final call money, that is 1 rupee, that is 1000 rupees he paid in advance. What is it called? It is called calls in advance. And if this is the situation, if he is paying the advance money, then in that situation also the company will pay the interest to that particular shareholder as mentioned in their articles of association. If nothing is being mentioned, then as per the Companies Act, they have to pay interest till the amount get due. Okay, from the date when he has paid the money till the second and final call amount becomes due, they have to pay interest at the rate of 12%. It should not go beyond that. So second and final call money this shareholder has paid in advance. What will be the journal entry? Bank account debit, they have received how much? 1,21,000. Okay, 1,21,000. To equity share, first call is 120. Then they have to mention this calls in advance account. Calls in advance account 1,000 rupees. Understood? Then when they make the second final call, what will be the entry? The same. Second and final call, they are asking 1 rupee from 60,000 shareholder. 1,000 have already paid first. The amount will become due. So equity share second and final call account debit. How much? 60,000 shares into 1, that is 60,000 rupees, to equity share capital account 60,000 rupees. Okay, and then they will receive the money. So what will be the entry? Bank account, how much they receive now? Bank account debit 1,000, they are not going to receive, they will receive 59,000. Okay, we will close this calls in advance account. So calls in advance account debit 59,000 to equity share second and final call account. Final call account, sorry, 1,000, my mistake. 59,000, and we'll close this by 1,000, so 60,000. Okay, this will be the journal entry when there is a calls in advance. There could be a situation that there is a calls in arrears account and there's calls in advance. Okay, so you have to see it when there is a calls in arrears. Fine. If you want, we can take one illustration wherein, let's say 500, one shareholder holding 500 shares then pay the second and final call amount. So this is what? This is calls in arrears. There's one shareholder holding 500 shares, he didn't pay 500 rupees, so this is calls in arrears. Now when they receive the money, what will be the entry? Bank account, they didn't receive 500. Okay, so it will be how much? 58,500. Okay, bank account debit 58,500. Calls in advance, they need to close this account. They have received calls in advance 1,000. Now what is this? 500 is calls in arrears. They have not received that money. So what will be the entry? Calls in arrears account debit 500 to equity share second and final call account. How much it will be? 60,000. And when he will pay, that particular shareholder will pay the money, the entry will be let's say, I'll pass it over here, bank account debit, and we will close calls in arrears account. Close calls in arrears account for rupees 500. Okay, and as I said, they can ask for interest for him if he has made the delayed payment, if mentioned in article of association, whatever it has been mentioned, they can ask for that amount of interest. Okay, and that interest entry will be what? Bank account debit to interest on calls in arrears account. Okay, I hope you got this thing. Now this is what how we pass the journal entries, but that is not the situation, right? This is journal entries for each and everything, but we studied about subsidiary books in 11th standard, right? So whatever will be the bank transaction, we maintain what? Cash and bank book. Okay, so all the bank transaction, this bank transaction, this bank transaction, whenever they are receiving the money, where they need to pass this entry, they need to pass this in directly in their cash and bank book. So they will maintain cash and bank book. Okay, I hope you remember single columnar, double columnar. This is receiving in the bank account, so cash book only, we will maintain cash book only. Okay, sorry, by mistake I written an account, and whatever money they have received through bank, they will directly debit it in their cash book. Okay, so bank account 2,60,000, in bank column they will mention 260. This entry they no need to pass. Then second entry, when they receive the allotment money, they will mention it in the cash book 160,000. This entry also they will not pass. Then when they are receiving the amount on first call, again 1,21,000. so whatever money they are receiving, they need to pass in their cash book. They need to just pass this journal entries, okay? So these journal entries they need to pass. If it has been mentioned in the question that you need to prepare the cash book and pass the necessary journal entries, so you will prepare a cash book, and whatever bank related transactions are there, whatever bank related, you need to debit in the cash book. Okay, if they are paying interest, let's say for calls in advance, if they are paying interest, then it will get credited. Okay, fine, I hope you got it. Now I will prepare how the balance sheet will look like based on this. Okay, whatever journal entries we have passed, based on that I will show you how the balance sheet will look like. Okay, so this is how the balance sheet is going to look like. Balance sheet of Universal as at 31st March, right? Now, what we need to show in the balance sheet? The equity and liabilities. This is just the things that we have mentioned. There is a lot many things we need to mention, but we are just talking about share capital. So this is how we need to show the share capital amount in the balance sheet. So equity and liabilities, there is a shareholders funds. Amount transferred to share capital account is 5,99,500. These are the notes wherein the working have been done, and that notes we need to show, like, okay. And then assets, current assets, under the head of current assets there is cash and cash equivalent of 5,99,500. Where is 500? 500 is missing because one shareholder holding 500 shares didn't pay the second and final call amount, so 500 we have not received, so we will show 5,99,500. and this is how we will show the notes to accounts. Okay, this is notes to accounts. First is share capital. First we will mention how much will be the authorized capital. Okay, authorized capital 1 lakh equity shares of rupees 10 each, that is 10 lakh. Issued capital, how much the company has issued? 60,000 equity shares of rupees 10 each, that is 6 lakh. Subscribed capital, okay, these are the categories, types of capital. Authorized capital, then come issued, then come subscribed capital. So subscribed capital, under subscribed capital there are two situations: fully paid up, not yet paid, not yet fully paid up. Okay, so one situation, subscribed and fully paid up, there was 60,000 shares. Okay, 60,000 shares. Out of that 500, the shareholder holding 500 shares didn't pay, so he didn't pay the final call. But who has fully paid up? Fully paid up is 59,500 shareholders have fully paid up. So subscribed and fully paid up is 59,500 shares of rupees 10 each, 5,95,000. Subscribe but not fully paid up. 500 shares, amount of 500 shares have not been fully paid up. So what is the amount? 500 shares of rupees 10 each, 5,000. How much is calls in arrears? 500 rupees. So we have received from one shareholder 4,500 rupees, and the total is 5,99,500. This is how we will show the notes to accounts. Okay, you understood how we will show the balance sheet, you understood how we will present the notes to account, and if it is been mentioned prepare a separate cash book and pass the necessary journal entries, then you have to do it. So this was all about calls in arrears and calls in advance. In the next video we are going to talk about oversubscription, under subscription, if shares are issued at premium, all these things. Okay, but till that time I want you to do the basic practice of all these things. This is basic practice. If you have get a hand on all these things, other journal entries to understand will be far more easy. I hope you got it. See you next Wednesday. Till then, thank you very much.